What is going on, traders, and welcome back to IFX. So let's go over a trading plan. I have a student, an IFX student, who took his time to actually make a nice trading plan using the IFX Pullback Zones. So let's go over this because it is quite helpful and very interesting, and then hopefully this can help you in the future. So let's go over what he did, with the type of rules and the data, and then, go over examples so you can more or less understand what he's talking about, and then, well, he took his time. So let's go and do this. All right, so the strategy, again, we're going to be using the IFX Pullback Fibonacci strategy. And what we did is he uses a lower time frame, but if you're starting out, I definitely recommend to trade only on the 15 minutes, okay? Once you understand clearly the strategy, then you can go down either to M5 or M1 time frames, okay? So here he put, it all depends on your capital, really, so pretty much 50% per trade. Maybe you can go a little bit lower. Again, it all depends on the type of account that you have, okay? So you have to be very conservative, especially if you understand. And if you're starting out, if you only have $1,000, then of course you're not going to trade 0.50 lot size, okay? You have to do either 0.1 or 0.02, okay? So very, very, important that you understand the lot in here, because that determines, how far you can go, without losing the account, okay? So now it's very important that you can analyze 10 pairs, which is good, okay? But it's also good that you understand the strategy and focus on a couple, and then, you make one entry or two entries per pair so you can handle and manage it correctly, okay? So total trade open at one time will be 2 maximum, okay? Right here, well, he put in here just little rules in here: no martingale, use consistency rule, lot size, okay? And then no trade interference. So what he's doing in here is not putting really, if you put a stop loss, not move it, or stuff like that, just pretty much get in and then wait for the market to do its thing, okay? Now the process in here, we're going to be using the indicator. So again, the IFX Pullback Zones. We can use the RSI or the CCI. For now, I really want you to start using only the RSI, because the CCI could be a little bit hectic. It is more volatile compared to the RSI, so stick with that one, okay? We do have the custom AMA in here. Let me actually, not custom MA, okay? And we can also use the higher time frame moving averages, okay? So now, what is the process in here? The main thing in here is that we understand that we have an active trading area, which is going to be pretty much between yesterday's high and low, okay? So that's the main trade where we're going to take in inside between yesterday's high and low, okay? Now we have boxes, the red and the blue boxes, which pretty much those are taking prior day's highs and prior day's lows, okay? So if we have to make sure that we're inside or in between those boxes or inside a box, but not if you're above all of them. Then, again, I'm going to show you examples so you can more or less understand in there, okay? So we are within the inner boxes in here. We're going to identify, if we are above or below the moving average, okay? Wait for the arrow to appear, buy or sell within the prior 4-hour candle. All right, so identify whether the RSI or CCI is in extreme overbought or oversold conditions, okay? So this is OB, overbought, and OS is oversold, okay? And, this one, RSI divergence or CCI divergence, is really good, okay? It is not necessary, but those are good, okay, to have it in your strategy. So now if price is beyond or has crossed either above yesterday's high or below yesterday's low, then we're not going to make an entry, okay, especially if you're starting out. So what does this mean is that, let's go over here the data, which he did. It was pretty clever, very nice. So we're going to put in here the date, right? currency that you're going to be trading with. So here you can select the currency that you traded. I know he only trades gold for now. And then is price within the active trading zone. So what does that mean is that are we inside yesterday's high and yesterday's low? Okay, so let's go over one by one and look at it on the chart so you can understand what it means. So is price within active trading zone? All right, so what does that mean? So I'm going to go to my chart right here, and then I'm going to locate myself. So this is yesterday's high and this is yesterday's low. Okay, is price between in there, right? We're going to make a trade inside here, right? Whether to sell, wherever it is, and whether to buy. Now, take a look in here. Price right now is below yesterday's low. So are we going to take a trade? No, we're going to ignore, at least we're going to ignore buy entries. Maybe we can look for sells, but not buy when we are below yesterday's low. Okay, so right here, again, is price within the active trading zone? Well, right now, if we're looking at pound dollar, no, we're no longer inside our active trading zone. So we're going to ignore it. Now, is price within the inner boxes red and blue? Okay, so we're going to go here. We have the red box right here, which is good, right? And then the blue box is all the way at the bottom. So that criteria, it is met. The first one is no longer met. So yes, it is possible to look for buy entries in here, but now we're a little bit on a danger zone, okay? Because when the entry happens inside or in between yesterday's high and low, it is considered, every entry is a little bit dangerous, but that is less dangerous. Once we're outside yesterday's low or above yesterday's high, it is a little bit more dangerous, okay? So the second criteria is met. So the first one, let's just say right now, we're looking at pound dollar. So I would just have to look for pound dollar in here somewhere. I'm pretty sure I can type it. So GPUSD. So the first criteria was not met. This one, it is met, okay? Because why? We are in between these boxes. If price is above in here, then we're no longer in between the boxes or inside the boxes, right? So if price was outside of here, this is even more dangerous. Or if price was below my blue one right here, so we are not within the boxes, okay? So then that criteria would not be met, okay? Very simple. So this one is met. Is price in the red or blue zones, okay? So right here, currently, yes, if we want to buy, we preferably want to buy within the green zones, right? It's best not to buy within the white area because, we don't know if the pullback is going to be strong enough. So, and we only want to sell also when price gets closer to the red zones, right? Those are better entries. So, for example, let's just say, for example, you got a sell entry in the white area. So maybe it's not best, okay? It's not considered the best entry. Right here, price hit just a little bit of the red zone right here, and then it gave us an entry. So it was kind of there, the rule is not, it does not have to be with that. We're only in the upper zones, right? At least somewhere within the darker, red zones or blue zones in order to buy. All right, so that criteria is met, right? Now, is price within the distance from the MA? What does that mean? So if I take an entry, for example, I want to have some distance to my moving average, okay? Because why is that? Because if my entry happens too close to my MA, what if price hits the MA and then that's it? It gets stuck and then it bounces and then it goes against me. So the idea in here is that, let's just say for right now I would have taken this trade, then I know that for right now my only distance to run this trade would be the MA. And then I would have to pray, hopefully, that it will break and then keep on going higher. So the idea is that we want to have some type of distance from my entry to the MA in order for me to capture more pips. If you want to capture less pips, then you know that, well, pretty much you have to be, in and out. So for example, let's say we got an entry right over here on this candle to sell, right? It hit the MA and look what it did. Price bounced up again. So again, you just want to have some distance, within the MA. You have to have your own judgment with that. So let's just say, right now that distance is not really the best one if we were going to take it. So we don't make a checklist, right? Now, is the arrow within the prior 4-hour candle? All right, so it did, right? This is my prior. If you see this line, this is my prior 4-hour candle, and in the arrow, the candle arrow, closed above it. So yes, that condition is actually met. So I am going to click it off, right? And then, is the RSI overbought or oversold? Well, there is a little bit, in terms of the RSI, there are things that you have to consider. Like if it hits the 30, it is definitely oversold. And if it is really close to the 70, it is definitely overbought. Now, right now it is outside, it was outside of my 40, really close to the 30, but it was not too much oversold, right? It is a little bit, but not too much, not an extreme. So maybe you could say if it gets closer to here, or maybe 35 would be considered that, let's just say that it wasn't. Although I do find it okay if it's just below the 40. So let's just say no. And then if there's divergence, so what does divergence mean? Well, divergence would be that this price went lower than this one. You see, if we compare this RSI, and then right here, it did actually a little bit, just a tiny little bit. This low is a little bit lower than this one, okay? So we do have a little bit of divergence, which is not noticeable, but if you compare this low, the RSI went higher. So the RSI went higher compared to this low, and then in here price went lower. So we do have divergence, okay? So in here we would just say yes, divergence. So I have more or less maybe a 57%. I'm looking at 15 minutes, right? And, I'm looking for a long in here. I put in my lot size. Let's just say I want to enter with 1. And then, you can put the entry price. You can put in, stop loss if you want to put, take profit price, and then pips, right? And then, whether you won or you lost this entry, right? So win or loss. And then you can take a picture of that entry just in case, so it reminds you what the pattern was, right? So more or less it will give you the nice pattern, so you can make sure that when it happens, when you see it, then you will take action. So for right now, let's just say I would have taken this trade right over here, right? And then, well, more or less maybe it would have not given me much of pips in here. From here to here, it would be in 3 to 4 pips, adding the spread on that. And then, I can just see if I can hold it and more or less see market behavior. If I don't see that it's going to break and I see it's really hard to break, then, I would have to decide whether I get out or I would just re-enter again, make a second entry somewhere lower, right? You can say, well, if it hits this level, I will make a second entry, or if it touches this line right here within this blue box and this level, then I will make a second entry so I can average out my entries, okay? So more or less, we have to remember your first entry sometimes is not going to work right away, okay? That is given. So if it doesn't work right away, you will have to decide, all right, so if it doesn't work right away, where's going to be my second entry? So you will consider second entry here or a little bit lower, whatever it is that you see market reacting, and then you will just make a second entry and then get out, okay? So it's very simple. This is awesome. And then all it's doing is that pretty much keeping you on check. What is it that you're doing? And if it more or less you're following the rules, right, as much as you can, right? The more checks that it has, well, the better it is, right? So pretty much is very simple. So let's just say, for example, again, let's say right here, of course, I can draw the box myself in here so I can give you an example of where it was, okay? Well, this box was actually right here all the way at the top. Okay, I'm taking prior highs, and then my lower one, it was from here to here. All right, so yeah, this is not, let me just kind of play around with this so that he can have an idea what I'm talking about. So I'm gonna just do not draw it, right? Okay. So this was for this day. If we were analyzing pound dollar for this day, let's just say this day right here, let's just more or less check it out and see what it was, right? Sometimes on a Monday, market can be a little bit silly, and but this was Tuesday actually. So let's just go and check it out and see in here, oops, what it was, right? So again, let's just uncheck everything right here, and then pound dollar again is priced within the active trading zone, and then we go back in here. I don't want to do this one because again, this was not inside within the active trading zone, although it worked out because we were inside the prior blocks. So let me look for another pair quickly just to kind of see, so I can show you the example. Maybe we can go over another one. Let's take a look at dollar CAD, what it did today, so we can more or less see what is going on. This one, not a good example either. Let's take a look at pound yen. All right, so this one, it's a definitely good example. All right, so let's go back and see right here, pound yen, right? So if I'm gonna look for it, just put more or less, you can type it in. So it's priced within the active trading zone, right? So what do? Well, this is, obviously not right now. Let's just look at this either buy entry or this sell entry. Let's consider this sell entry for now, or let's just do both. I mean, it doesn't matter. So this buy entry, right? Let's just go back down a little bit. So was this entry or price at this current moment within yesterday's high and low? Yes, right? So boom, it's priced within the inner boxes, right? The red and blue. All right, so let's just check it out. Well, this is the top box and this is the bottom one. Well, we are within those boxes, right? Doesn't matter where they are, as long as we are either in between or inside of them, that's good. All right, so boom, that's good. Now, is red, it's priced within the red or blue zones, right? Or green zones, but this is blue, more or less. So yes, okay, we were on the third level. This is even great. This is awesome. Yes, the darker the better, but sometimes it doesn't reach there, like over here. So the darker the better. Yes, that is true. All right. It's priced, in distance from the MA. All right. Well, definitely we are, okay? If my entry happened over here, I do have some distance from my entry to the MA, which is good. All right, so I do have a distance. If it breaks and goes above it, then even wonderful. So yes, right? Is the arrow within the prior 4-hour candle? All right, let's go and check it out. Let me just make this bigger so we can see, right? So this, you see, this is the beginning of the new 4-hour candle, okay? So it did happen inside my 4-hour candle, which is this low right here, because this was the new 4-hour candle. So yes, I can consider that. I still have to be a little bit careful, but I can consider that, okay? And then, so yes, that was completely met, right? Is RSI or, oversold or overbought? Well, it is, right? It did hit the 30, or very close to the 30, so yes. Now, is there any divergence on this RSI or CCI? Again, we're only looking at RSI. So right now, no, because, well, on the day today, I love the divergence, looking at it within the same day, not going prior days. I love looking at today's only. But So no, that one definitely not. Again, it's not necessary for looking at divergence. It's best to look at divergence later on in the day, like how it is right now, instead of the beginning of the day. All right, so cool. So pretty much, if I would have taken this trade, well, it would have worked out very nicely, okay? It would have been from here to here, been 17 pips. And then again, our exits could be what? Could be the MA, could be when price gets closer to the 70, or when it hits the first level of the red zones, and then pretty much all of them were met. So you could have gotten out it here, or a little bit somewhere in here or in here, right? So this entry was a nice 86%. Again, divergence is not necessary, only maybe towards the end of the day. So this would have been a wonderful, wonderful entry, okay? So that's pretty much how you're analyzing, don't complicate it, if it works yet, and if it didn't, all you do is you make a second entry. So like right now, with this one, a lot of things are against us. We are not within yesterday's high and low anymore. Right now, this arrow candle did not happen inside prior 4-hour candle. Again, there are a lot of things that are not within our conditions that if we try it, then it might not work so well. Okay, so I think this is awesome. Thank you so much for, putting this together, and then more or less is going to help me, and it's going to help many of you out there. So let me know if you have any questions, and then we can go over it in the channel.